The last presenter to share with Gil for the time remaining here is the youngest senior vice president in banking history. Number one producer for Plaza Bank for over the last 3 years. Please give a warm welcome to Adam Seery.
Thank you. Am I on? Do you guys hear me? Okay, wanted to make sure I was on. My name's Adam Seery. I work for Plaza Bank. We are a regional lender out in California. I focus on areas from basically San Francisco down to San Diego. We also have branches in the Las Vegas market, expanding into Phoenix very soon. I am a BDO, I'm a business development officer, so I'm on the streets doing owner-user financing loans. That's all we specialize in. And I have just been promoted to a sales manager, so I'm kind of a working foreman. But what I wanted to do today was kind of educate you on owner-user commercial real estate financing. How many people currently, show of hands, do owner-user business either personally or have people in their shops that do owner-user loans, owner-user financing scenarios? Perfect. How many people would like to start doing those types of deals? Well, it's my job here today to kind of give you some instruction in terms of what you're looking at, how to get in that type of business, and why as a broker you should focus on owner-user financing or owner-user commercial sales. Owner-user, what is it? We treat owner-user as any operation where an operating company is occupying at least 51% of the total square footage of a building. So if you have an office space that's 10,000 square feet, and you have a CPA firm that's occupying at least 55% of that square footage, that would be considered an owner-user deal. This can apply to many different types of properties: office, industrial, retail, and then the special use stuff as well: gas station, hotels, motels, car washes, mixed use, auto repair. Owner-user financing does not apply to what Gil was talking about: apartment loans, any sort of single-family residence, condo projects, development loans, raw land deals. So there are several different types of financing available for owner-user financing. Again, I'm here to tell you about these different programs by any given lender. So why should brokers focus on owner-user? Number one, always a demand for this product in each one of your markets. It's small business driven. No matter where you go, no matter the economy, the recession, there's always going to be a manufacturer that needs to produce widgets, that needs space. There's always going to be a CPA that needs to see clients in an office building. There's always going to be the need for retail storefront for people to sell their goods. A majority of these programs, and we'll get to it in a minute, are government-backed programs that your local banks offer to provide high leverage financing. We have a 7A loan scenario, which the SBA guarantees 75% of those loans for banks that are making those specific types of loans. There's also called a 504 loan product, where the 50% first trustee is held on to by the bank, and there's a 40% second. It's called an SBA debenture that comes in. That's a government-backed loan that's on a second. So those give banks incentives to lend to small businesses in those specific areas. The whole 6 degrees of separation. Everyone in the owner-user world is connected. Businesses have vendors, they've got customers. They are out constantly talking to other types of businesses in the market. If you do a good job for them, chances are they're going to let other people know. And that's how I've made myself in Southern California, is every time I close a deal for a potential owner-user, I'm talking to that business owner saying, who are some other people you know that are looking to buy a building? Who are some other people that are looking to refinance a building, and going down that path? With the increase to SBA size standards, Small Business Administration loan size standards, more large deals are getting done. There's a common misnomer out there that, I don't broker owner-user deals because they're small. Not the case anymore. The size standards have just been increased, where the SBA will go up to now a $5 million project cost. So with reference to that, you can do $10 million deals, you can do $15 million deals. There was a deal in LA not too long ago that was a $22 million purchase deal for a manufacturer that had SBA money put towards it. Global cash flow versus NOI debt service. On owner-user deals, we're not taking a look at the NOI to work backwards towards an LTV. We are specifically looking at that borrower's business and him personally to repay the debt. And that's how we get to higher loan to values. That's how we can get to a 90% LTV on a purchase deal. That's how we can get to 75% on a cash out or a rate and term refinance deal. We're just looking at them personally and their business. For every dollar of debt that they have personally, every dollar of debt they have in terms of their business, along with the real estate payment, as long as they have $1 worth of income, coming in on the other side, between them personally and their business, that'll qualify for our type of deal. It's a one-to-one global cash flow is what we're looking at. And last but not least, sense of satisfaction. You're helping a little guy in the community that's, making jobs, creating jobs, helping the little guys, manufacturing widgets, like I said before. So I'm going to go really quick into a couple of the different programs that are sponsored by the Small Business Administration. The first one and the most popular is an SBA 504 loan. And this is a participating program with the SBA. What it is a bank like Plaza Bank or your B of A or your Wells Fargo will do a 50% first trust deed on a purchase. That's a conventional loan, portfolio loan that the bank keeps in-house. The second is a 40% SBA loan for a combined 90% loan to value. And that is created by what's called a Certified Development Corporation. And those are basically middlemen or brokers that work for the SBA in order to lend the money, place it, put the product in placement, do the servicing, fund the loan, so on and so forth. Those rates are taxpayer subsidized rates. So those rates today on the second trust deed, that 40% portion, is 4.63% on a 20-year fixed. So it's a very, very, very attractive product for owner users, especially at a high leverage 90% loan to value. Some of the eligibility requirements, these are still small businesses, so we can't look at these businesses that are making huge revenues year in and year out. You got to be limited to $7 million in after-tax profit net for the last 2 years combined, and the borrowers also can't have more than a $15 million net worth. The second program offered by the SBA is what's called the 7A program. And this is a 90% loan that essentially all banks that are PLP or preferred lenders can make on behalf of the SBA. So for instance, Plaza Bank's a PLP lender. We make our own decisions for the government. They've given us a stamp of approval to go ahead and make those. Find local lenders in your area that are PLP approved lenders. We make our own decisions for this division. It's a 90% loan. Typically, these are adjustable loans tied to prime. They've got very forgiving prepayment penalties. These are the tougher deals that typically you get done. People that are projection-based loans or cash businesses or having a tough time getting financing elsewhere, this is the program we put them into. It's got a 5-3-1 declining prepayment penalty, and typically it's your businesses that are just taking off. Guys that haven't had a lot of history in terms of income and what they can produce, but guys that show a lot of promise and ultimately are looking to buy buildings for their business. Last but not least is conventional loans. These are in-house portfolio deals. For these conventional loans, it's a non-SBA product, so you don't have to follow the government's rules. A lot of people don't like passing over their tax returns over the government. They're in fear that something might come down the road. So the next option would be an in-house conventional loan. Typically, you're going to have to put more down. You're going to have to put 25% down. From the bank's perspective, there's no credit enhancements, so the deal needs to be more solid across the board. And typically, people are bringing in relationship or stronger type of borrowers with this program. This works well with borrowers that don't fit the SBA box. The SBA, they pull what's called a 912 form, and a 912 form is for criminal history, or if you've had a DWI or DUI in the past. A lot of those don't qualify for SBA loans, so this is a nice alternative. And then it also helps with borrowers that have too high of net worth or really big businesses that are making big profit. This also can support larger loans. Obviously, B of A can do a $50 million loan if they feel like it to an owner-user type deal. Alternative funding solutions right now. Very interesting market. Todd was talking about he lost business to Lehman Brothers going down. I worked for Lehman Brothers for 4 years, so I was right in the middle of the action. And I was a part of the CMBS market and saw that grow, and the premiums that were generated on it were unbelievable during that time. It was great. Yeah, it was a lot of fun while it lasted. But ultimately, that's gone now. The large premiums are gone, but we're starting to see some trickle back into that market. And I'm starting to see, I'm part of the pooling process with our bank, and we sell the guaranteed portion of those 7As that I told you about. And we're starting to see the same investors come back into the game, which is very interesting that it's happened this quick. What the SBA did, I told you about the 504 loan, how that 50% first trust deed is a portfolio deal. The SBA said we need to create more jobs. We need to put more money on the street for small business. And what we're going to do to entice these banks is we're going to end up buying 80% of that 50% first trust deed loan. So now as Plaza Bank doing the 50% first piece, we're now able to pool 3 or 4 of those loans together and sell 80% of that on the secondary market for 108, 109, 110 premiums. So on $1 million loan, Plaza Bank's making 80, 90, $100,000. It's not like it was back in the olden days when they were making 16%, but it's starting to get back to that area. So this is one of the secondary market type traits that's going on now that should start to spur more activity by your local lenders. Ask your local lenders about this pooling program. It's a big deal. What's that? It's called the 504 pooling program. Pooling, it's the top one up there. Secondly, low mod income special program financing. Morgan Stanley came out basically with a new program, and it's a whole loan sales. They're a wholesale type of lender where they said, we're going to find all the low and moderate income areas demographically. We're going to nail down, and we get tax benefits for lending in those specific areas. So what we're going to do is, instead of keeping those tax benefits to ourselves, we're going to actually put that back into the borrower's rate. They've come out with some unbelievable products in terms of those areas where they can offer 3.5% first trust deed on 504 type loans that we were talking about, 3.5% first trust deed rates. Unbelievable for this time in terms of what they're looking at. I mean, that's lower than residential rates for that type of thing. So that's starting to gain some ground. We're starting to see Zions is back in the market. Zions, for all of you who don't know who Zions is, they are a whole loan buyer from community and big banks. We're starting to see them be more aggressive in the market. And then last but not least, secondary market. Where are we at today? Like I said before, I'm starting to see a lot of the same investors come back into the market. Just because you can't get 6.5% yields anywhere else in the market right now rather than buying commercial real estate loans. Now, I want to give you a quick overview of what I'm seeing in the market, big banks versus small community banks. So I just did a pro and cons of the national banks versus the smaller banks in the Southern California market. This is what we're seeing. The pros of working with national banks today is they've got really low cost of funds. So you're going to see lower interest rates, very attractive interest rates, very aggressive in terms of pricing, large service area. They've obviously got brand recognition for any of your clients that you're bringing to the table. If you go, hey, I got a guy for Bank of America that I want you to talk to, people understand and they know who it is. The cons of working with the big banks, in my experience, are they are very slow. They've cut a lot of the jobs associated with funding these loans, so they are over-inundated with lots and lots of loans on their books, lots of loans through underwriting, and that's slowing the process down. They've got very aggressive loan covenants in terms of, you've got to meet certain debt coverage ratios or else we're booting you out from the bank's balance sheet perspective. High debt coverage requirements. They want to see a 125 DCR requirement. And then underwriting is typically very, very conservative. If there's any blips on your credit report, if you missed a car payment, 5 months ago, typically they're going to pass just for that specific reason. Local banks, pros and cons. Pros, they've got to be Johnny on the spot. Being a smaller bank, I know that the big banks are out there. They've got better terms than I do. I've got to be Johnny on the spot, get in quick, get in out with the borrower, and let them know that I can close their deal faster than the big guys. I need to get them responses faster than the big guys. We're more service-oriented. A $500,000 loan to a smaller bank is going to mean a lot more than a $500,000 loan to a B of A or a Wells Fargo. We are transactional. A lot of the times, we're not requiring the large relationships where the big banks are. And last but not least, we're not sweating the small stuff. We are not, like that same scenario where a guy's got missed his car payment 5 months ago. We'll take a quick explanation in terms of, hey, his payment slipped between his seats on the way to work, and we're good to go. The cons is typically the borrowers are paying for that aggressiveness. They're paying for higher pricing, obviously limited customer recognition, limited branches, for deposits and service. And then typically we have a little bit higher in terms of fees because we don't have the buying power the big banks do. In closing, if I could leave you with a couple things, here's what I'd leave you with. Number one, find a mixed bag of big and community banks within your specific areas. Know who those guys are, know who the local guys are who are getting deals done, and pick a couple. And when you're working with your owner user buyers, give them 2 or 3 names of guys and say, hey, call all 3 of these guys and see what they can do for you, and let them work it out that way. With those banks that you choose, really understand their products, understand what they're quoting, understand what their pricings are, so that when you're talking to a borrower and he goes, hey, what can I expect on something like this? You can at least say, you'll get a 90% deal, your blended rate's going to be X, over a period of 25 years. That'll definitely help your credibility out in the market. Next, find a go-to bank. And what I mean by when I say go-to bank is find a bank that's able to get done the tough deals. When all else fails, hey, go see Adam at Plaza Bank or go see so-and-so over at XYZ Bank. He's the guy that's able to get done the really tough deals. And then last but not least, when that tough lender, when that guy, when that go-to bank passes, it might be time for you to pass as well with that specific buyer. Time to move on to the next one. Not everyone is bankable in this environment. If nobody's showing, if an owner user is not showing anything on their tax returns, chances are that guy's not going to qualify to buy that building. So that's it from my perspective. Any questions with reference to owner user financing? Nathan.
Oh, hi. I guess I'm first.
Brian, go ahead.
Could you talk a little more about the possibility of SBA financing tenant improvements? I just did a deal where a client bought a small office building, and he got about 120% of the purchase price because they agreed to finance his tenant improvements as well.
Sure. So how we treat tenant improvements, and it varies bank by bank, but ultimately if you have $1 million building and you have $200,000 worth of tenant improvements, what the bank is going to do is they're going to add that $200,000 to the $1 million purchase price, so it's going to be a $1.2 million total project cost. Then we'll take the 90% total loan based off the $1.2 million instead of the $1 million. So yes, it is available. Like we talked about before, it's your own specific bank that's going to make those decisions in terms of how to work those tenant improvements.
I just want to mention that I've worked with Adam before in the Southern California market, and just like he was talking about, I have an actual deal. It's an office building in Mission Viejo, California, and they got disapproved by Wells Fargo and Bank of America. And I used to be a loan officer at Bank of America and Wells Fargo, so I know how their process works. I mean, at Bank of America, you can't even, a business development officer can't even talk to the underwriter. And once they make a decision, they're not going to go back on it. But I got Adam involved. He closed the deal. We had been waiting almost 60 days for these other two banks, and Adam stepped in and got it done in about 20 days. And another thing, too, lenders can help you close deals and move people off the dime. If they're leasing a property, you can call guys like Adam. He'll do an investment scenario or a loan scenario for a 504 program. Or 10% down, and he can show you how much the payments are going to be. And a lot of times on an after-tax basis, it makes more sense for a tenant to buy a property rather than to lease. And like the other gentleman said up there, when there's blood in the streets, the time to buy. And I've gotten people to buy properties that were leasing because of scenarios that bankers have provided for me. So I recommend that you really use your banker to get these scenarios, and maybe you can speak to that a little bit, Adam, about what you do and how you can help.
Yeah, I mean, out in the market, I'm providing guys like Nathan, brokers out in the market, own versus lease scenarios, financing scenarios, anything he can do to help his buyer buy that building. And if your banker's not doing that for you, you need to find another banker, because that's the going market for these types of products and making sure that you can get the deal.
Adam, are you seeing any financing on solar, whether that's already in place financing or a property that's already in place or as part of the transaction?
Yes, we are. Interesting enough, out in California, out in Riverside, which is the Inland Empire, you'll see these huge solar farms now that are going up everywhere, where there's there's 1 million of these solar panels out there, and they're basically selling power to the local power companies. The SBA has approved solar as part of their project costs, so it is recognized by the Small Business Administration. Just like we talked about the TIs, we're including in the total project costs. So if people already have solar panels, or they're looking to place solar panels on top of their commercial buildings, we can add it in and finance up to 90% of those total solar panels, which is a huge deal. Getting back to Nathan's point, one last thing is with the small community banks, they do have a lot more leeway in terms of getting stuff done. They've got a lot, I can go to my president of my bank and say, hey, this guy doesn't look good on paper, but here's 3 reasons why we should get this done. It's very important that you have a couple of those guys out in your markets that are able to do stuff like that for you, because at the end of the day, they can get the deals done, and everyone wins at the end of the day. So if I could leave you one piece of information, it's find an aggressive local lender that can help you out, help get your deals done. Anything else? I appreciate your time. Everyone have a safe flight home.